We're on express elevator to hell. Going down.
2, 1, mark.
What is going on YouTube? It's Brendan from Market Makers. I am the smashing machine. We are ripping these markets apart. Guys, I view all of you as part of the Market Makers militia, right? Your armament is advanced Fibonacci techniques and esoteric concepts. And your single soul mission-driven purpose is to rip as much money as possible from these Ponzi scheme markets. All of you can do it. You can find your financial freedom. So sweethearts, let's get ready. Get ready, tack up. It's time for the show.
All right, you're a team and there's nothing to worry about. We come here and we're going to conquer and we're going to take some. Is that understood? Yes, sir. That's what we're going to do, sweetheart. We are going to go and get some. All right, people, on the ready line. Are you me? Yeah. Are you me? Yeah. Where are you? Where are you? Hudson! Get on the ready line, Marine. Get something to do. Get on the ready line. Yo! Move it up. Get hot. 1, 2, 3. Come on, get on. Get on. Get on. Move it up. 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 1, 2, 3, 4.
Absolutely badasses. Let's pack them in.
It's almost Halloween, guys. So happy Halloween. I love Aliens. It's a great show. It's a great movie. If you guys haven't seen that, especially some of our friends in other countries, check that movie out. It's a great Halloween movie to watch. Nothing to do with Halloween, but it's a horror movie. So it's a great movie. Let's talk about these markets, guys. If you notice the thumbnail is a chart, right? And it shows two trades. Obviously, we've traded a lot more than that, but we shorted at the top of the S&P at 45.92 on the Discord. And I shared that 43.82 short for a near 300 bar drop on the S&P. If you've been watching the last few videos, I gave you the Bitcoin diamond breakout, smashing the fractal high. You caught an 11% move. Lots of people show chart thumbnails and they say things like collapse, or we are here, or I'm very scared. How many people give you the big trades to succeed in this marketplace and help build your financial freedom? Trading can change your life. It changed my life. I was able to retire. Mark, our senior trader in the room, he beat me to it. He's in his 30s and he's retired. He just trades full time. Guys, check out our Discord. SimpleFX and BingX will pay for your first month. This is not a monetized channel. I appreciate the people clicking the thank you button. You don't have to do that. I would rather see you in the Discord with our 12,000 other people because it's a fun place to be and you can learn a lot. Our education, our indicators, our live streams. I just did a live stream this past weekend. We have harmonic live streams, block slate updates. It's all included and you can try it out for free. SimpleFX will also give you up to a $5,000 bonus based on your first deposit. Check out that exchange. It's fantastic. All right, guys, let's get into the charts. So a common question, if you've been watching my last few videos, I've been over this, but I keep getting this question. Where is your market bottom? And what is the next trade that you're looking at? Well, let's talk about the market bottom real quick. So this is the Elites trend line here on the S&P, right? Going back to the bottom of 1987 crash. Where did it find support? And I zoomed out. This is monthly on the log. It found support after the dot-com crash. Just start at your trend line. This trend line comes up, right? This trend line comes up, provided market tops here, and then you had the pandemic crash and all the stimulus, the trillions and trillions of stimulus, pumped the market up above the trend line. Look at my harmonic expansion of esoteric wave theory, 2618, 4829. Okay. I'm showing you this for a key reason. Where's the 1618, right? The golden ratio, 2417. Plato said, the cycle of growth and decay is one and the same. If you look back at the bubble cycles, how much did the S&P go down? The broadest market. Remember, just on the sell-off that we're on right now, the S&P has 4 times the market cap of crypto roughly. So looking back at 08, S&P fell 57%. .com, S&P fell 50%. Going back to the 1972 bubble, S&P fell 64%. let's just say it's an average of 50%. Harmonic expansion 2618. Look at this. This is the easiest thing in the world to do. If you go to the market high, down 50% to the exact point here, right? 50%. 50.11 takes you to 2403 or 2417. You're reversing. This is harmonic contraction going back to the golden ratio. All of this is bubble excess from trillions spent. This will be your final bottom. And as you guys know, being a trader, trading and forecasting, two separate things. I have forecasted based on a fractal pattern that I've shared with you now in the last couple of videos, May 2024. That could be the final bottom. You still have to come down and take out your low. And right now, what am I looking for? We've been talking about it since last video. I'm looking for a rebound up. A rebound up, depending how strong that rebound is, could break out for some upside, or it's just another opportunity to short a three-wave pattern, aka a double top. So just keep all of this in mind, but this is harmonic contraction. It's what I'm monitoring. Guys, I want to show you something and get you to open your minds a little bit, because I saw a lot of you are very open-minded. Some of you are not. I saw a lot of people saying, I can't believe you're trading with astrology. Well, I want to show you shorts that I took here in the market. I marked them here at these circles, okay? Here's shorts I took in the market, and you guys can tell me if you think I'm a good trader or not. So this is the S&P, 123 bars, minus 3%. And here's an S&P short, minus 2.63%, 110 bars. Here's another S&P short, all right? These are all trades. 120 bars, 2.71%. And now this is the 45.92. It circles over here, and that would be at 45.79. But we actually took this at 45.92. That's 45.98. So I'm going to use this. Now, some guys in the Discord are still holding this trade. That's an 11% move down, okay? Almost 500 bars. Let's just say you just came down to that doji, right? And I trade with ATR. You Forex traders know what that is. ATR's average true range. This is a half ATR difference from the actual initial trading idea set up to where we actually executed the trade. So it's well within the stop loss threshold, typically trading at 2 ATR, 2.5. So that's that drop right there is another 154 bars. Let's do the next short on the S&P. 167 bars, almost a 4% move. And of course, here's another short on the S&P, a 7% move for 316 bars. And now where are we at here? We traded this at 43.82, shared this on YouTube. So let's get that 43.86, close enough. And that got you 6.5% move, 281 bars. These are all shorts I took on the S&P. Does that make me a good trader? This is 12 or 1,300 points on the S&P in these 7 trades. I'd say that's pretty good, right? You would say, hey, I know this guy. He's traded the S&P 7 times since April 2023. He's made 1,300 points on the S&P, and that's assuming you didn't keep any of these larger swing trades open, right? So at a bare minimum, this is what you're looking at. Now, what if I told you I only took some of these shorts? What if I told you these shorts are not actually shorts, these circles, these are actually moon phases? What if I told you that? So let's look at this. These are the new moon phases. New moon phases. This is esoteric cycles. Again, this has nothing to do with astrology. If anything, this is astronomy. This is earth and space science in high school, or I took it in university as well. So everything has a cycle, rotation cycles, planetary cycles, life cycle of human beings, civilization cycles. You have agrarian cycles. Down to the cellular level, you have cycles of reproduction, decay, death, okay? Everything has a cycle, the backbone of natural law trading. Would I ever trade solely off of a moon indicator? No, this is a trading view stock moon indicator, okay? It's just a basic moon indicator. These are new moons. What happens when you add moon phases? Let's add full moons in here and see what this looks like. Well, full moons gave you some trades too. There's your top. Here's your exact top to the candle. Here's another top that you could have shorted for the first part of that double top. Here's another top where you could have caught this move. And where are we now? We just had our lunar eclipse, right? These are nothing more than pivot points in the market, just like we talk about the equinox dates, cardinal points in the market. overall, you have to know the market cycle you are in a bear market rally. Like I said before, nobody's ever called me a permabull after 2009 when 80%, 90% of my trades were longs. When I came to this space and I knew the cycle we were in, the 7-year cycle, I knew there would be an opportunity to make a lot of money, a lot of downside risk shorting the market. So you have to use things in confluence, understand natural law trading, understand natural cycles. Let's just turn this off again real quick. I want to show you what would this have looked like. Take the full moon off, and I'm going to walk you through these pivot points that are coming up, okay? What would this have looked like if we went all the way back to the all-time high in January 4th, 2021? Let's just go to the all-time high. Where is your new moon? I mean, look at some of these trades, guys. If you understand the market cycle, I mean, we took a lot of these trades. This is how I was able to retire S&P and Bitcoin and the Russell, okay? Here's your exact all-time high. That yellow line is there because you know what January 4th was, 2022? That was perihelion day. That was when the Earth is closest to the sun it's going to be for the whole year. What does that mean? I just knew it meant a potential for a pivot. We're going to get into solar cycles in future videos. Some of this stuff will blow your guys' mind. But you had a new moon as well. You had a new moon here. Look at these drops you got after these pivot points. New moon here. Look at these drops. You can measure these. New moon here. Again, you need to understand where you are in the market. I use lunar cycles, solar minimum, solar maximum. I use all of these things in confluence with Fibonacci, the overall market cycle that we are trading in, and it helps influence high probability trades from my standpoint. If you don't view it like that and you just view it like, oh, that's just stupid, that's astrology, that's fine. That's the difference between being able to retire 25 years early or just grinding it out, winning some, losing some over and over. You have to open your mind and understand natural law concepts. Charles Dow understood this. That was the premise of Dow theory, price moving in waves. He compared the actual trend of the market to the tide. He compared the wave movements in the market, the ripples, the intraday movements, and then Gann took it another level, looking at planetary alignments and stuff. You can go deep down that rabbit hole. Some people spend a lot of time studying this stuff. I study the big things, the things that I notice in confluence with patterns and confluence with my charts and my understanding of cycles that have given me some massive trades in the market, some of which I share on YouTube, and I share as many as I can on the Discord, guys. Just something to consider. Again, a thought experiment of understanding how cycles work, how they affect the natural market. Now let's go back because I had some key pivots here and we're going to move forward. When we look here at the S&P, so we just had our Ring of Fire solar eclipse. There's your new moon, right? Ring of Fire solar eclipse. And then we just had the lunar eclipse this last weekend. I went out and saw it yesterday. The moon was orange. It looked like a pumpkin, fitting for Halloween. And it looked like it was 50 feet off the ground. It was awesome. I tried to take a picture, but it just came out, like a blur. But look at the exact pivot that you have right now in the S&P. You have that exact pivot. And let's go ahead and throw the moon phase back on here, the full moon. This is just a basic moon phase trading view indicator, guys. There's people that program this stuff. You can get more data. Here's your full moon, right? Partial lunar eclipse, full moon, and we have our pivot. And I told you in confluence, somebody said in the comments, which I thought was interesting, man, this guy's been bearish shorting the market all the time, but now he's looking for a rebound because we understand, people that understand the market cycle you're in, look at the market. It moves in waves. Had a wave down, looking for a wave up. Where that wave goes, does it double top out? Does it give us further expansion? We're going to get into that in this video with S&P, Bitcoin, look at NASDAQ, look at the Dow, look at some individual stocks as well. And I added the CAC for my French friends so we can go back over that. But this is what we're looking at. So we have this pivot now. Now the next new moon, again, remember, been providing some very nice tops based on these percentage drops. The next new moon is November 13th. We have PAL November 1st. So that is what, in 2 days? Powell is not predicted to hike. He's supposed to be on a pause because the market priced in a 99% chance he will not hike. However, Powell is dealing with hot data. CPI was slightly hotter than expected. We have jobs data coming out. The last 3 jobs prints, even though most of it's part-time jobs, have been very hot. So Powell has hot data. So my premise is I think Powell is going to be jawboning hawkish. He's going to do a hawkish pause once again. So what will that do for us? Well, let's look look at the S&P because I think your ability to move up is going to be between here, November 1, November 13th, and we'll see where we get to. November 27th is that next full moon. We talked about the Puet's crash cycle. That goes out a full moon after the eclipse, which takes you out to November 27th, okay? And he studied 8 crashes. Does anything have to happen? No. But he says if it does take effect, you'll have 2 to 4 weeks of hardcore selling by the eclipse or the following full moon. So normally, he says, in some of the biggest crashes, you get an up move, a lower high that can be 6 days before the eclipse up to 3 days after. I went out and actually bought his book because I'm sure a lot of you Googled it and there's not a lot of information out there, just people writing their thoughts on it. I bought his book. I spent a lot of time this weekend reading it. I understand his thought process. So this is what he's looking at, okay? He would be looking at, again, he's not a trader, he's a mathematician. He would be looking at this from a full moon perspective coming out to November 27th. Anywhere in this range, you have the ability to make a lower high. New moon, again, providing great tops, okay? So let's see what happens between now and November 13th. And how will this translate when we look at some actual TA? If we look at actual TA, I know there's a lot of lines on here because I have the channels, right? We have a couple of things to look at. I'll zoom in so you can see this, but we have a couple of things to look at. I pulled my fib. A lot of you are going to ask me this from March 13th. This is the impulsive move up. You see that? You had your accumulation. This would be your coil right here, as you could call it. This would also be a VCP pattern, a volatility contraction pattern. Again, your higher low structures coming in, and then you expand upwards, right? This would be your wave up. So you coiled up. I pulled my fib from here. This would be an impulsive Fibonacci retracement. And look where you fell, the 618, 4,113, right? Almost to the dollar. And now you're getting a little bit of a bounce. Now, I've seen a lot of bullish commentators talking about the market's so oversold. That's why it's going to bounce up. Well, we talked about this on the live stream in the Discord over the weekend. Market's not that oversold. This is an MFI. This is a volume-weighted RSI, right? The market's not that oversold. It can go much lower. So I'm kind of thinking, and this is my theorizing here, what I'm thinking seems likely to me to happen is if Powell jawbones hawkish, we can do this little rally for a couple of days. And I think you're initially going to get a pullback, right? So I think you're going to get something like this. Price right now, time of recording is 41.63. We can do something like this. Come up, come up. Maybe we hit the bottom of the trend line. Powell comes out hawkish. We get that pullback, okay? This is the pullback I would be looking to trade if I think the market's showing me it wants to go bullish. Now, I do think, and many of you will disagree, swinging up for an up trade here and a long and a bear market rally that's descending with geopolitical events, 2 conflicts happening. I mean, I can't say these words, so I hope you can pick up my meaning. We are one event, right? A misplaced explosive thing happening, say in a Western European country and America from like potential, think 9/11, right? What the stock market do, right? Crashed. So think that type of thing. So this is a lot of risk, and you cannot trade on the weekends. You cannot trade these equity markets on the weekends except for Sunday futures. So there's a lot of risk, and there's a lot of people not staying in the market. I have several professional trader buddies that trade at home, and they won't stay in the market over the weekend. They're literally day trading because everybody wants to be able to get out. So I think there's inherent risk here, but the way that you would trade this, again, we talked about this last video. We talked about this in our live stream too. Looking at a W pattern, right? The way that I would want to trade this is a higher low, and we need this with fib confluence. We don't have enough candles yet. We need a higher low. I'm going to wait till after Powell, okay? So after November 1st, I'm going to see what the market does. It might run up, pull back. I want a higher low confluence with a fib, and then my stop loss is going to be $1 below this, or maybe a ATR or a half an ATR. Different methods you can trade this. This is how Harold Gartley traded this all the way back in 1938, profits in the stock market. This is a daily time frame, but you're looking for that basic W pattern to do this. Get up, pull back, higher low, break out. The way WD Gann traded this, he traded that pivot off that W break, okay? So that could be a place where you could also add if you do get this swing up. Be aware, we've talked about this a couple of times now in the videos. If this is just your leg, like we're talking about for a massive double top, you come back up, you got the 200 just above you, like 42.50, 42.60. You got to break above that, right? And then above that, you got all this resistance where we shorted last time. Be aware you can just do this exact same pattern these double top 3-wave patterns and a larger set here, okay? You zoom out to the 3-day chart. We did that before. You can see it's just a larger double top. You have your 50 above you, your 200 above you. Be aware these rallies could fail at any time. Geopolitical events, and of course, the actual cycle that we are trading in a bear market. You need to be aware of these things. So I'm looking at these pivots in confluence with the charts. I want to see movement up. I want to see a pullback, and maybe you get the test of that 200, get that higher low, come back up, and I want to trade it down here if I can and try to capture this move. Because if this move works out, right, if you get nice upside off this move, is this other chart cleaner? Not really. Thought I had a clean chart on here, guys. I don't want to erase all this stuff. I have a bad habit of erasing things and then forgetting to save them, or I save them when they're erased, and then all my work got killed. Let me take away his moving averages, get rid of some of this stuff so you guys can see this. We'll get rid of this fib. All right. So the way that this could work out with the large W pattern here, even though I want to see a smaller W form. And when I'm talking about these W's, guys new to the channel, I basically trade M and W patterns, advanced Fibonacci patterns, okay? I trade these M and W patterns, your W patterns here on your bottoms and your M patterns here on your tops, okay? 3-wave and 5-wave patterns. And I want to see that form here. But if this was to be a larger pivot off of this, you would have big upside if this actually played out, right? If the market gets more euphoric, you'd be looking at 45.84 for harmonic expansion, take you right back to that rally top. And I'm not suggesting that will happen. That is not my base case. My base case is that strong resistance back to where we failed before, right here, roughly the 786. 43.37 up to 4,400 because you're battling the 200 and the 50 moving average. That would be my base case on a rally rebound, okay? Again, printing this W. That would be my base case. Get rejected by maybe the 200, come back up and start chopping around, making a top. Maybe you get some contact here with your trend line, and then you start breaking back down again. That's my base case, but I want to trade the pullback and I want to trade the top, flipping back and forth like traders will often do. Let's go ahead and look at Bitcoin. Again, gave you guys this Bitcoin trade. That was just so awesome how that worked out. Made that video just before the breakout, whenever that was. When was that actual breakout? Monday. Yeah, that was a Monday video, October 23rd. Video came out within 8 hours. Bitcoin shot up, breaking our fractal high, shared the stop loss ideas with you, got this 11% move. Now, some of you guys probably remember I've been saying, when is Bitcoin in trouble with the S&P? And I said, if the S&P sells off below 4,200 with velocity, keyword there, with velocity, meaning strong trend, I would expect Bitcoin to start pulling down. The S&P is trying to bottom. So what I'm expecting Bitcoin to do, and we've been over this ad nauseum, Bitcoin since March of 2023 has ranged all the way from 24/7 up to 32K, but it's been going sideways. It's been going sideways as the S&P went up to 4,600, and as the S&P sold off 11%, Bitcoin's lagging behind it. So really, I think for Bitcoin to fall below here, to really fall apart, first of all, you're going to see it in this tight range it's trading in because it's overbought right now in the MFI. It's trading in this tight range. I think you'd have to see a hawkish pal, a really negative market reaction, and you'd have to see the S&P really start pulling down below 4,000 now because Bitcoin's still staying up here. And what I think is going to happen is the S&P gets its bottom, gets its rally, either forms the double top 3-wave or gets the W pattern going and has some more upside, maybe to 4,400, 4,350. I think Bitcoin's going to break out of here. It might lag, it might move in confluence, but I think you're going to get our 41K target, right? Again, harmonic expansion 1618, which you are clearly basing above, to 2618, just like I showed you on the Elites trend line for the S&P. Harmonic expansion, I think you're going to get that if we see this rally form in the S&P. Remember, this 2618 lines up beautifully with the 786 from my retirement trade up here from 48.2. Right? And the 618 is just above you at 35,697. So if you get the bounce in the S&P, the largest equity market in the world, losing $4 trillion just on that pull down, again, 4 times the market cap of crypto, if you get that bounce, I can totally see this breaking up. And where would you be worried just in near term, guys? Near term, where would you be worried? Look how tight this range is. Bitcoin's trading in 35.3 down here to 32,841. So if you start breaking down, right, if you start getting more erratic movements, you get down thrust, you get up thrust, you make a lower low, you come up, make a lower high, and you come out and you do any type of pivot bounce off of this little mini Wyckoff range, this is when you're getting concerned because you're showing weakness. You have your lower highs, you have your lower lows coming in here, and you're breaking out of this tight trading range where you've been trying to accumulate. But that's not happening. You're holding place, which is why I think you're going to get that impulse move up. It's going to wreck a lot of bears and a lot of bulls. Well, I'm sure bulls are probably ready for it, but the bulls won't be ready when Bitcoin actually tops out. You got to be agile in this environment, right? Agile in this environment. When you see something top out or you see something bottom, you got to be ready to go.
Let's rock!
That's right. That's exactly what you got to be. You got to let's rock. We got to get this done. All right. So again, we're overbought here on the MFI. That's my Bitcoin view right now, guys. We're holding in this range. And depending on what indicators you want to put on here, I think we're about to get a golden cross as well. You are just now getting that golden cross, the 50 coming up above the 200. So again, this is short-term bullish, and I have that higher target of 41K. It's been my target now for weeks, as you guys know, and that's what we're looking at. And let's go ahead and move forward. Let's look at the NASDAQ, talking about perfectly formed M patterns, M and W patterns, right? So again, you have the same money moving through the markets. You have your W's bringing you to the upside, your M's bringing you down. You have your first drive, your second drive, your third drive, and now you're looking for your rebound to see where you can come up to here on the NASDAQ. When you look at this on the NASDAQ, I still have my fib retracement I pulled down here if you view this as a larger double top, but your 3D2 is all the way at 14,552. A couple of key things happened. You almost hit your 200. Where's my 50? Let's get that 50 back on here. Let's set it up if I don't have it. All right, let's go ahead and do this. Let's get the 50 simple. Algos key off this, retail traders key off this. Let's see where it is. So your 50 is all the way up here. So again, depending on the strength of any type of bullish move, right? And I'm confluenced with what I'm seeing with the pivots between now and let's see where we get to November 13th. If November 13th even means anything, but let's see if we get this W forming because you're starting to get that first move up, right? See if you get this. God, that's awful drawing. Hold on. Let's see if you can get this W form and do something like this. Come up, Pal talks. In a couple of days, you pull back. If you can hold that higher low, move back up. What will our targets be? I'm always going to look at the 618, 786, 14.8, 15,072 and see if we can get above this. This will be above the 200, below the 50. You could get up to the 50 and do some battle. And if you're going to have more upside targets and a big move back up, this would be projecting you. If everybody listens to Tom Lee and buys FANG and the Saint 7 carries the market back up, this would be projecting you to 16,144 based off this larger potential W pattern that you have forming. Okay, that may form. I shouldn't say have forming because again, this can quite simply just roll up and top out for us and do something like this, right? Can do something like this on these larger time frames. The same thing is done over and over again, right? Just a larger top. And you can see this, guys, if you just pull out to a 3-day chart, right? Daily, you can always back up out of your time frames and see this, see what it looks like in a larger scale and see where you're getting your resistance. And you see you have your first run up here. This would be your first double top, right? Your first 3-wave pattern. You see it? Here's your first 3-wave pattern. And this would be the beginning of a second 3-wave pattern, right? So you haven't moved down. Let's see if we get that move back up and do this. And you're still trading in this channel until you break out of the 786. So until that happens, I'm going to be tracking this closely, again, in confluence with the markets, in confluence with cycles to see where we get to and make a top. And of course, we'll be talking about it here on the channel. So stay tuned for that. Looking at gold, guys. So this was big trades for us, right? You know, shorted up 2055, 200 bar drop. Mark longed it in the Discord at 1800s, back up at 2000. I tried a little baby short here. I talked about it at 1987. It dropped within a couple of candles to 1972. Moved our stop losses to break even, got nothing out of it. You know, it wasn't anything, $10, $15 trade. And now we got back up above 2000. When I'm looking at this from the pull down here, looking at the 786 at 2012, I would love to see this really extend up. And people are asking about the metals. Wouldn't this be a good thing to get into? And the way I view what's happening with the metals, gold, fear trade, okay? If you look at GDX, GDXJ, they are lagging behind. The miners are lagging behind. Now, if you listen to somebody like Peter Schiff, his view of it is they could double or triple from their position to catch up to gold. My view of it is, as you guys know, what does gold and silver do in recessions? Sells off hard. What happens to oil when the recession hits? Sells off. Go look at the pandemic, okay? Now, this is conflated and made more difficult the situation because of the geopolitical situation, supply and demand. So oil, tough trades. Gold right now, tough trades. What we have is a triple top that's up here. We have the MFI just staying like really high level, nearly overbought. You can see it can spike up. And even after it spikes up, you can still run up because this is an emotional commodities. The vibration of commodities with trading is a lot more emotional. And you'll see this with gold. You'll see it with silver. It really, really works off of human sentiment. You can really see it go. And this is why you had this parabolic rise up. Okay. So I want to see where this peters out at. And who knows, if the conflict expands, gold could go higher. If in a few weeks they announce de-escalation, whatever, nomenclature they want to use, you can see gold give it right back up. But I'm not a believer in this move for long term. Obviously, short term bullish. Long term, I'll be looking to short this when it makes a top. And, for those of the guys in the Discord or other people watching these videos at home that long down here somewhere, that's a great trade. And we'll wait and see where this gets to, but not in any hurry here on gold, guys. There's a lot of things presenting themselves, but that's kind of my view on gold. The FTSE. U.S. markets are going to drive everything, guys. So U.S. markets rebounding. What's the FTSE doing? We took shorts up here. Nice move down below 73.04. My target was 71.93, in line with these fractal lows as well, as you can see. That was the target. If this rebounds short-lived with Powell, and then you see the U.S. markets come back down, see if they can hold a higher low, right? Get that baby W. Or see if Powell causes a new low, maybe the S&P going to 4,000 or 3,900 before you start looking to make your higher low structure, then go back up. And if that's the case, I would still watch 71.93. 73.91 is a key level of resistance to break back above, to get back above these fractal structures as well. Fractals are nothing but self-repeating patterns, guys. Bill Williams made fractal trading famous, and he was one of my mentors for my trading methodology as well, okay? So let's go ahead and look at this at French 40. I added the CAC back. I went ahead and put this in a Wyckoff structure so you could see this. But real quick, what I'm looking at here at the French 40, same thing. Here's your 200, right? You bounced off the 200. 50 is above you here on a 3-day. Let's look at this on the daily, because nobody's probably trading on a 3-day in the world except me. But looking at this on a daily, you're kind of beneath your Wyckoff structure. Your first level of resistance is 70.74, 618's up at 72.74, 786 at 74.16. When I look at this, hold on, let's get some, did we hit our targets here? I'm looking at the Wyckoff accumulation down here. I want to get a harmonic expansion from this range. Look where your 1618 landed you, 75.75. This is actually a really big trade we took in a Discord and CAC. It's kind of a group trade we all did. And I nailed the rally top on that thing. It was fantastic trade. I was really proud of that trade. But we have a death cross here in the CAC as well. Death cross coming in a few days on the Dow. We have the S&P trading below the 200. We have the Bitcoin's just about to get out of its death cross, but you see this across the indices, the DAX and everything as well. So just be aware of this. The FTSE's in a death cross. Again, these mean something in bear markets. Look at your death cross over here. Everybody confuses what a death cross means. Everybody wants to look at data for 30 years saying, they don't mean that much. Well, when you got a death cross in your bear market, you got an 18% drop. So yeah, it does have a meaning, okay? So that's something you want to understand. And look how you rallied into the death cross. And again, this could be the same thing. If the U.S. markets move up, you want to watch this. I mean, that key fib level that held you up here is 71.58. You're trying to stay above the 1 fib. And when I look at this, you got a lot of fractals over here. You see this with your Wyckoff ceiling, you got a lot of fractals. That's the top of your pivot. So you want to try to hold this and move up. If you cannot, if the U.S. markets start moving down, then you're going to descend, guys. And your next key area to descend is going to be at 65.72. But I think you're going to try and attempt to move up. And when we have more candles, maybe on the Thursday video, we can go to like an 8-hour time frame, 4-hour time frame and look at this, because right now this is nothing. I'm not interested in anything here. I want to see a definitive move. Got to break that fractal high, 69.28-ish. Got to break that and give me a structure that I'm actually interested in trading, or else you're just doing something just like this, right? Maybe like a PAL, just as an example, PAL talks, pull right back down. And that's what I want to see what happens on the US markets. I'm not interested in trading until after PAL to see what type of patterns form, see if this comes down, and then we get our W for the upside, or see if we start making our W now. Let's go ahead and look at individual stocks. Tesla, not a lot to show you. I want to see this gap get filled up here, come up and hit 249, which I think will happen. Obviously, if we do get that rally, you'll see this come back up. That'll be a key resistance level, and we'll check higher levels once we get some type of structure pattern here. You got nothing. You just got lows, lower lows, right? That's all you have. So we had our massive double top. Talk about this ad nauseum. Our massive double top. We also have the smaller double top. This is the massive structure here, breaking your fractal low. And that was your 209. You broke below it to 192. And then you have your smaller double tops right here. And that broke the fractal low. And then you had your gap down, right? So now we don't have a lot of structure. And again, if this rallies, this is going to move with the markets as well. If Powell's really hawkish, you could see this sell off some more. Again, the markets are not oversold, right? So my indicators that I use to judge the markets, they're not oversold. They have room to move down. Doesn't mean you can't bounce from where you are, but it could go either way with Powell. Could easily go either way, and you could easily see markets move up a little bit and then back down. So I want to watch that, guys. You got to flip 217, but 249 is where I have more interest, filling that gap, seeing what kind of structure we get as we come up here. That's really the key. If we get a pullback, get a W, get a fib pull, see if there's a trade in there for us to take for further descent. Because you got to remember, Tesla, people keep asking me where it's going. Tesla got below 80 bucks last year. I think Tesla's going to be down at $40, $50 when the market really comes down. It's going to happen in levels. So I have no interest in buying long-term at $200 Tesla. Let's look at Ferrari. Same thing, guys. It's all going to come down to M's and W's. Are we getting our W here? Is this the beginning of our W for a big end of year rally to take us to 329? Or is this simply going to be a failure with a three-wave pattern giving us a double top? And time will tell. We need Powell to do his thing. I want to see what the rally does up to November 13th, November 27th, potential pivots. We'll see what happens in the marketplace as well as with yields. Key resistance levels here. I'm not even interested in Ferrari until we get to 309, 312. Take out that fractal high, then I'm watching 329, okay, for an upside expansion. And if we look at Adobe, I really do want to trade Adobe, and Adobe's getting a nice rebound. You have your low, you have your higher low, you have your essentially a Wyckoff range you've been trading in, with 560 being a key level. And if we get some expansion here, if we do get this rally, guys, I'm watching that 786 at that 608 level. And if we're looking at this again from a W type perspective, a larger W, you have this W that formed, right? So this could be this move. And we can see this just by simply using a fib, pulling these points here, and you get the 1618 at 616, 786 is at 608. So that range would be harmonic expansion. But again, just like Adobe's been doing, like everything else has been doing, notice the double tops, the three-wave patterns, and the larger double top would just be simply this move at a lower level. So all of these need to be watched. I went ahead and threw on ARM, my man. You keep asking for it. There's not, this is a 1 hour chart, because if you look at ARM on the daily, when was their IPO? In September? So all you got. This is really hard to give you TA on, knowing that obviously it's going to track with the other semiconductors. I would just suggest tracking it that way, because all I can really do, I mean, you barely have enough candles to even get moving averages to form on the 1 hour time frame. But ever since the IPO, the run up, it's been a sell off, right? You could say this is some type of declining accumulation. Is really hard to tell. This is a 1 hour time frame, but I would just look at this from the perspective of pulling this Fibonacci down. If this is your bottom right now, where could the potential rally go? $56.34 takes you back to these highs that you put in here. Could you go higher? Yeah, I mean, you could go higher. It depends how hard this rallies. This will be tied, potentially closely with NVIDIA, some of the other semiconductors. So we'll have to see how that plays out. Oh, and NVIDIA, I think I actually went over the top of my NVIDIA chart. So let's reload this. My NVIDIA, there you go. My NVIDIA should pop up. All right. So let's look at NVIDIA really quickly. NVIDIA is still, MFI is still bearish, and you're just holding this 50% retracement, right? So again, formation, potential beginning of a W reversal to the upside that we'll look to trade when we make a target for the next downside move, right? Or looking at it from this perspective, high, lower high, potentially a lower high, maybe right at your 50. So this is not enough information yet for me to suggest doing a trade. Could you just start accumulating down here thinking you're going to get this move up? You could. Again, I just view it, again, it's my market view. I view that as too much market risk, and you put in a lower low here instead of a higher low. You see that? So you are holding at a key support level, but I would want to see this break that fractal at 476, and then you're looking at potentially 523 on a big upside swing if you can get past 502, which is your Wyckoff ceiling here, okay? So that pattern would just look something like this. This is what you would have in this situation. You would have this move to the 1272, which would be 100% retracement almost of your X point, right? Or your 1618 expansion in a very euphoric market, rallying hard into the Santa Claus rally, the winter solstice rally towards the end of the year. That's two options. The other option is a dragon pattern, forming your three-wave pattern for your double top. And we'll get into all of this some more, and we'll start talking about some solar cycles come Thursday's video. Like and subscribe, guys. Ask me questions. I will be happy to answer them, as always, in the comments. Hope to see you in the Discord. Everybody have a fantastic and safe Halloween. Talk to you guys Thursday. Take care.